In this video, as promised, I'm going to be doing demonstration on IQ option on how to use these trading indicators on the awesome trading site, Tradingview, which allows you to be able to access these various indicators on all kinds of devices, such as your iDevices, your Android, and the indicators I already explained them in my previous videos. And of course, you are more than welcome to propose any other indicator scripts that can be found in the indicator section that you want me to review as well. I have not touched the IQ option platform in like 2+ years. So right now, what I'm noticing here is that they also reduced the minimum deposits for Bitcoin to 25, which is kind of cool. As with our previous video for pocket option, I'm not going to be using the charting on this platform. I'm just simply going to use it as a means to take trades. The first thing that we need to do is to check what instrument has a good payout. The ones with the highest payout at this point are all these ones. I'm going to just go with the EURJPY since this one is already giving quite a good payout. So let's just go with this, the EURJPY in this case. Everything else remains the same. At this point of time, we will be using the support resistance levels at this point. At the end of this, we will then go in on the start of the next, and we're gonna go with a put. Why put? Because this closed as a put, and therefore we just do it. The open trades can be seen over here. This part I have not forgotten. Here you go. Awesome. Trade is taking off in a very nice way. As with our previous video, if we win, we continue trading in the same direction. I'm gonna switch this to like a 30-second chart. So now we're at the start of the new minute. I just realized as well there is a countdown timer at the bottom of the screen. I was trying to look out for that earlier, I couldn't find it. Alright, it's been quite some time since I've been away from the IQ platform. Let's see if they allow us to do 0.1 trades. Let me just try that. Nope, it's still $1. Okay. Okay, follow up. Oh dear. Wrong direction. I very quickly just did the opposite direction. And one is to hedge and one is to go in the right direction. And we will set up for the next one as well. And we see what direction it is. At this point in time, I have to sit out for 1 minute because there is no clear direction sign. It's a reverse, but we don't know which way it's going to be. So we're going to sit out for 1 candle. So as you can see, there is like a hedge on this. So we just need to resume from that point. At the end of this candle, we will be able to go in for the next. Hopefully it will not be too close to the upper resistance line. Alright, and here we go. Set up for the next trade just in case. And this will be a put trade because of the direction it's finishing. Here we go. Whenever a new set of support resistance forms, I don't pay too much attention to it in the early phase because it's only after several candles. I mean, the longer the amount of testing by the price, that's when it becomes more significant. Next, I'll be doubling up. So the direction we'll be taking this time is going to be a call direction if this finishes in that way. As I usually, like I said, I'll be a bit more careful with the direction when it's closer to the lines, but I said these are very close to the price action, so I'm not going to bother. Let's go set up our next trade just in case. Alright, here we go. 1, 2, 4, 8, 16, 32. Still fitting within the range that I had in mind because like the what do you call that? The developer for this, he did say he tested it for like 4 levels. So like for the benefit of doubt, just and following this trade, set it down to $1 for the next one. And like I said, don't worry about it because the levels will protect you. And we take the next trade. Okay, let's see which direction we're in. It's a put, so we're winning this, and therefore the next one will be a put as well. We follow the same direction until we get our closing signal. Okay, we have to set up for here. In the last seconds, it turned into a call signal, so we set up for a double up in the opposite direction. One more thing that I'm testing during this video is the timing as well. This is the Asian lunch. I will be making another video to compare like lunchtime trading and also like prime time trading. Okay, so let's go up to 4, and then now it's a put trade. Go for a put. What we're facing here is that we are caught in a very tight range. So at the same time, I may also want to check the other pairs that are available and see how the other pairs are moving. Are they moving better than this or the same? It should come up quite nicely. You just break down based on the price action. Set up just in case. Yeah, since this one, let's go check out the other charts. Also very jammed up. Oh my god, this is good. Oh my god, this is good. Alright, so yeah, let's do that. We do the Euro Pound instead. There is no signal here, so we have to wait for the next signal. Trends versus consolidations will be more profitable for you. Even if there's a reverse, it will be a prominent reverse rather than a consolidated one. Because it's close as a put, and we go with the put trade. So what I'm saying is that this trend has been going up for quite some time. So even the trend will have a reversal sooner or later. Then we do things. 1, it breaks higher. 2, it comes down to the middle Bollinger Band. But either way, we know how to react. And either way, it should be a prominent enough movement that we can capture within 3 trades. I'm going to win this, so we'll stay with the same trade size. And we continue. So right now what you're seeing here is the breakout of this level. Alright, so that we should see a call indicator quite soon. Let's not guess it, but we should see it quite soon. Call should appear. We wait for the call to appear. Let's not try to if you want to leave it to the decision of the indicator, then we just leave it purely to the decision of the indicator. And if there's nothing there, we will then sit out this minute. So we sit out this minute. Alright. Okay, now it comes out with a put signal. So we need to see if this one finishes this minute as a put, and then we'll then go in with a put for the next trade. Alright, let's go. Disregard the opposing signals because we are supposed to base on the signal of the closed candle if there is one. If there is no signal on the closed candle, then we wait for the next one. If we're in a trend, we just stick with it, so we continue to take entries. So if you want to see more of that, watch my previous video. My previous video and this video, I've been doing like live commentaries just like this. So what do we do next candle? Because it's a put, we don't have an opposing call signal, so we're going to keep doing puts even on the next one as well. So we set it back down. Right, we'll just watch until the last 10 seconds, and then we're going to get ready and see what happens to it. Now it's changed to a call signal, but we'll see what we end up having to do. Okay, we're going to win it. Now we do a call. I actually realized that the call signal had disappeared. So under such circumstances, what do? Depending on the account size, we can continue it, or we can continue it as in keep martingaling, or we can resume at the same trade size to just offset that trade. But I think it should be fine because the call signal is already here. And then we'll just simply continue in that direction. Alright, last few seconds. 6:57. Alright, next minute. Let's go for it. In the meantime, when you're doing this, you can study the price action, make your own guesses on where the price will hit to and see if you're correct. If it hits the line at the top, I will stay put. Let's say like this price level, it hits that level, I will stay put for a minute and wait the next, because like I said, once the support resistance have been set up for some time, they begin to carry some importance on the price. But if it's still middle of road, yes, we can definitely go in for the next one. So in the last few seconds, same thing, we're just going to follow up as well. Alright. Next one will be a put trade. Even here, I'm seeing that the price is getting into a lot of consolidation. So after this one, we want to try to stop this session, because if you guys notice, when you do more levels on Martingale, it's not necessarily more profitable, and we're going to calculate that later on as well. So it's kind of range bound if you notice, but if it is range bound, that's also a good thing, because I know that we'll get the next trade. If it breaks down, great. If it bounces back up, great as well. Alright, so in this case, we continue. If it's breaking through, that's great. Otherwise, it's still close enough to the lower support. And then we know we can get on the next. Notice how the price is being resisted. Alright. Like I said, so this is the resisting of the price by the price action. So learn to get a hang of and a feel of that. Alright, now let's look at the trade history, and I want to calculate like what is the total profits. The first thing I want to calculate is the profit or the loss from this big set of trades here. Also, there was a little bit of a blunder on this one here. So what's interesting here in IQ option is that they show you the net profit loss for that trade. Oh, we won that. Oh, okay, that's interesting. That means we didn't have to do this one. $27.52 minus 16 minus 8 minus 4. What's that? And minus 228. So we're actually minus 276 for this set of trades. Alright, let's look at the overall profits or loss and see how that works out. So we already know from this whole set it's minus 276 plus 0.86 plus 0.86 minus 0.04 minus 1 minus 2 plus 3.44, okay, plus 0.86 minus 1 plus 1.72, 98 plus 0.86 plus 0.86 minus 1 plus 1.72 minus 1 plus 1.72, and that's a total profit of 4.14 in the amount of time, well, 22 minutes. Could have been a little bit more because that previous set of trades didn't realize, made two mistakes back there. The first one is wrong direction, second one of course wrong trade size. So that caused for a little bit of a loss. Otherwise I would have estimated for about this 22 minutes of work, it could have been like about $6 at the minimum trade size of 1, which is not bad for a lot of people. Let's assume that you're in a better time of the day for 60 minutes continuous. Of course, in a real life situation, maybe the market is bad, you probably, let's do it half an hour and then come back a few hours later for another half an hour. You could actually realistically look into making $20 a day, even if your capital is just, let's say 100. Quite realistic. Thanks for watching, and as always, demo before you go live, so that when you go live, it is already a risk that you're prepared for, and in some cases you don't even perceive it as a risk anymore because you know exactly what's going to happen. And if you observe the price actions as I've been describing and giving my commentary during this, you get your confidence in the way the price behaves. The link to getting your free IQ option demo account is down beneath this video. Thanks for watching. Hit the bell notifications button for more great videos just like this.